Do you ever hear people talk about the stock market and you think, sounds cool, but what does it even mean? Well, you're not alone, and I'm here to break it down for you in a way that actually makes sense. By the end of this video, you will not only understand how the stock market works, but also how you can use it to grow your money. Part 1. What's the stock market? Alright, think of the stock market like a giant marketplace, but instead of buying fruits or clothes, you're buying ownership in companies. These pieces of ownership are called stocks or shares. When you own a share, you literally own a small part of that company. For example, if you own a share of Tesla, you are a tiny part owner of Tesla. You don't get to boss Elon Musk around, but you get a piece of the action when Tesla makes money. The value of your share can go up if the company does well, or down if it doesn't. We'll dive deeper into that in just a second. Part 2. Why do companies sell stocks? Now, why would a company give away pieces of itself? It's simple. They need money to grow. Imagine you own a coffee shop and it's doing great. You want to open 3 more locations, but you don't have the cash. Instead of taking a loan from the bank, you sell shares of your coffee shop to raise the money. That's exactly what big companies do on the stock market. When a company sells its shares to the public for the first time, it's called an IPO, or initial public offering. Think of it like a big debut party for a company on the stock market. Remember when Facebook went public in 2012? That was their IPO. Since then, people like you and me have been able to buy pieces of Facebook, now called Meta. Part 3. How stock prices are determined. Okay, so how does the price of a stock actually get decided? It's all about supply and demand. If a lot of people want to buy the stock, the price goes up. If more people want to sell it, the price goes down. It's like a bidding war on eBay. Let's take Apple for instance. If Apple announces a new iPhone that everybody loves, more people might want to buy Apple stock, driving the prices up. But if their earnings report shows a drop in sales, then investors might sell, causing the price to drop. Part 4. How investors make money. So how do you make money in the stock market? There are 2 main ways to make money in the market, either via capital gain or dividends. Capital gain is when the stock price goes up. For example, you buy 1 share of XYZ company for $100 and a year later that share is worth $150 and you sell it, you've made $50 capital gain. The second way is dividends. Some companies share their profits with shareholders in form of dividends. For example, if you own 10 shares of a company that pays $2 per share in dividends, you will earn $20 just for holding on to those stocks. Part 5. The risks of the stock market. Now here's the catch. The stock market isn't all sunshine and rainbows. Prices go up, but they can also go down, sometimes fast. This is why it's important to invest wisely and not put all your money in one stock. Take the 2008 financial crisis, for example. Stocks plummeted and people who sold out of fear lost a lot of money. But those who stayed invested, many of them recovered and even gained more in the long term. Part 6. Long-term investing versus day trading. There are 2 main ways to invest: long-term investing and day trading. Long-term investing is like a turtle. It's slow and it's steady. You buy quality stocks and hold them for years, letting your money grow with the market. Day trading, on the other hand, is like a hare. It's fast, risky, and not for beginners. Most people lose money trying to time the market, so unless you're ready to study charts all day, stick to long-term investing. Part 7. How to start investing. So how do you actually start investing? These days, it's super easy. You can open an account with an app like Robinhood, Fidelity, or Charles Schwab, deposit money, and start buying stocks with just few clicks. But remember, don't just buy random stocks. Do your homework. If you're a beginner, index funds are a great place to start. They let you invest in a group of stocks at once, like the S&P 500, which includes 500 of the biggest companies in the US. It's like buying a whole buffet instead of choosing one dish. Part 8. Final tips. Here are a few quick tips to wrap things up. Start small, invest only what you can afford to lose, think long term, and avoid panic selling when the market dips. Diversify, don't put all your eggs in one basket. And that's the stock market in a nutshell. It might seem intimidating at first, but with a little knowledge and patience, it's one of the best ways to grow your wealth. If you found this helpful, give this video a thumbs up, subscribe, and let me know in the comments what's your first stock going to be.